realities of precious metals investing. This is a first-time endeavor for us, so please bear with us as we try to foster our way through the webinar. Andy, if you'd be so kind as to flip screens. The disclaimer, our attorneys are always ever prevalent, and I'm sure you all read that quickly. A little bit about Miles Franklin, and then I'll turn this over to Mr. Hoffman. My father and I started Miles Franklin together in 1990, and a lot of people ask me, where does the name Miles Franklin come from? My father's middle name is Miles. He is the person who writes our morning newsletter, and his best friend, a very successful insurance salesman here in the Twin Cities, middle name is Franklin. He gave us the seed money to start the company in 1990. He was bought out 6 months later, but the name stays. We've been in business for 22 years. We've eclipsed over $3 billion in sales. We did close to $200 million in business this last year. But more importantly, we've done this maintaining an A+ rating with the Better Business Bureau. We've also done this by education, not just my father's newsletter, but now Andy Hoffman's brilliant insights into what's happening before us. And there's so much happening before us, we've decided to open it up a little bit to people like yourselves so that we can answer questions here in this forum to see how it goes. The one thing that I would suggest and implore everyone to do is to please sign up for our free daily newsletters. Between my father and Andy's writings, you're talking probably about 15 to 20 hours of research and writing every single day, and it's for free. And do yourself a favor, do your friends and family a favor, sign them up for our daily newsletter. At the end of this discussion, Andy and I will both answer questions. You can type your questions in the chat section, and we will do our very best to answer them one by one. With that being said, I'm going to turn this over to Andy. And once again, everyone, thank you very much for attending the first ever webinar by Miles Franklin. Andy, it's all yours.
And thank you, Andy. And want to let everyone know here, if you haven't been reading what I've been writing, I am thrilled to be here. I've been at Miles Franklin now for 4 months. It seems like it just started, but it's time is passing very quickly. The firm is very dedicated to helping people to learn so that they can protect themselves, and that's why I'm such a good fit here. What I figured I'd do for people who haven't seen my presentation or heard portions of it is, first I just wanted to give a little background of me because I'm out there a lot, I'm speaking a lot, I'm writing a lot, and I just want people to understand who they're talking to, who they're listening to. Because when you see this page that you're reading right now, you'll understand why I am the way I am, aside from a little New York edge that I have in me. You know, the way I look at it, I've had 2 lives. They've interlocked by a couple of years. You know, I'm from New York, from Long Island. I went to college for finance, got my CFA. I spent roughly 15 years on Wall Street. You can take it 20 years back if you want to go to all the internships I had. I've listed what I've done in my past. I find it interesting, and the reason I write on the right, Bank of America, Lehman Brothers, et cetera, is, you know, I've been molded by what I've seen in the business. You know, almost every company that I've worked for has either failed or been bankrupted or scandalized, both the buy side and the sell side. The largest piece of my career was at Solomon Smith Barney. At the end, I was an oil field service analyst, and when I was there, I sat next to Jack Grubman. I watched the whole WorldCom thing. I was friends with the Enron analyst. I saw all kinds of scandals when I was there, and it really scarred me about Wall Street and how they exploit the public. I left that job in 2005. I've never been at Wall Street since and never will again. 2002, though, is when I started with my precious metals investing and research, basically. So you have a 3-year kind of overlap where my heart and mind was out of Wall Street and into gold. I was fully invested in 2002. I spent probably the next 5 years learning about the business. Thank God I didn't become a sell-side analyst in gold because that was my initial intention. Unfortunately, no one in the business, even to this day, has any interest in hiring sell-side analysts, and it really wouldn't have been a good position for me anyway. But as you can see, I've been writing now for 5 years. I've been using Ranting Andy for 2 or 3 years now. And as you can see, I've also worked as either an officer, as the head of investor relations, or a consultant through a company I called Torrey Hills Capital to dozens and dozens of junior mining companies. So I really know not only the bullion side of the business, but the mining sector side of the business. So I'm always available to answer questions about that topic, even though I will never invest in those companies again. I am 100% bullion, and that's the way I intend to stay. So let me just, when I start out a presentation about precious metals, the first thing I have to do is just show a chart that goes back for when the bull market started. 2000, it's the fact that so many things happened right at the turn of the century is just, I don't know if it's karma or what, but the fact is the Glass-Steagall Act was 1999. You had in 2000 the tech bubble burst, and then in 2001 you had 9/11. You also in early 2002 had the top of the dollar, and this is not coincident that these things all happened at once. But essentially, when you talk about the bull market in precious metals, you can go right to the beginning of the century, and gold has gone from $250 at its low up until almost 1920 in August, and today it's about $17.30. Silver started out about $4, got as high as $50, and today it's $34. And platinum was $500, and it's roughly tripled since then. But per what it says on the bottom, most investors just have no idea why, and there's a lot of reasons for that. Okay, so when I talk about, if you read my pieces every day, you'll notice how I spend a great deal of time talking about the Dow Jones Industrial Average. It's really, to me, a meaningless average. It's got 30 stocks in it out of thousands and thousands of stocks. And if you're talking about the U.S. Contribution to global production, most of these companies get most of their sales outside of the U.S., so they're, a lot of them are barely even American companies anymore. But I do show it because, in my mind, the average man on the street who has no financial experience in the world is aware of two things. They're aware of the Dow Jones Industrial Average, not necessarily the price of it, but simply if it's going up or down, and they're certainly aware if the price of gold is surging. They may not even know if it's going down, but they always know if it's surging. And so I note the Dow and gold because I believe these are the two most manipulated indexes in the world. I guess you could say that everything's manipulated to some sort, whether it's QE to buy treasury bonds or all the currency shenanigans that are going on. But as far as what's shown to the public, it's very important that the Dow Jones Industrial Average is shown to be going up, and it's very important to try to show gold going down. Of course, it's been unsuccessful, but on a day-to-day basis, they do their best to keep things looking that way. Now, this chart of the Dow goes back to 2000, and as you can see, it's barely up over this entire 11-year period. Of course, if you look at the bottom, 4 of the stocks have been deleted. There's a survivor bias, so if you put Citigroup, AIG, GM, and Eastman Kodak, which have either been bankrupted or bailed out, the index would be down quite a bit, probably I'd guess 10 or 15%, and you'd have a lot more angst in the market right now. So again, everything is a mirage, and the Dow Jones Industrial Average is the top mirage of all. Okay, but again, what I just showed you is what the Dow has done in nominal terms. Now, real terms is what pays the bills in an inflationary world, and there are many, many ways of measuring for inflation. So I just use a couple of them. On the left, I use if you adjust the Dow for how much the dollar index has gone down. Now, that's only a 12% decline, but I don't really like to use the U.S. dollar index. As far as I'm concerned, it's almost a meaningless. It's a meaningless measure because it's just measuring two paper currencies against each other. Essentially, the dollar and the euro. The euro is 60% of that weighting. So the fact that if you look at the right side of the chart, the Dow has been surging lately against on this chart. It's because the euro is falling apart. I mean, what would happen if Europe was not on the verge of collapse right now? Certainly this index would be looking even worse. Now, again, let's get by the dollar index for a while because I just despise it. In fact, anytime you hear the term the dollar index, I would just ignore it. It has no meaning, and in the last few years, it's had absolutely no correlation with the price of gold. Okay, then you look at inflation, and there's many ways of looking at it. Most of them are manipulated as well. And that's why the first measure of the CPI I have here is the actual government-issued CPI. Now, this is what they tell you inflation is, and what they are telling you is that the Dow is down 33% in real terms since 2000. And with all the hedonic adjustments and substitutions, you would think that they could have done a better job. But the fact is, if you had one of each Dow stock 11 years ago and you still had them today, you'd be buying 33% less goods. Of course, what you don't see is what the real CPI is, and there's many ways of measuring that. One of them is just common sense to realize that inflation is a lot higher than the current CPI. And the second is to go to some of the authorities that do this work. I highly recommend, on the left is a chart by John Williams of shadowstats.com. He's probably the preeminent guy at breaking apart the government statistics and making them real. And according to him, the CPI right now is closer to 11% than the 3% that the government is projecting. And if you use the blue line there, which is his alternative CPI going all the way back to 2000, you'd see that the Dow is down 2/3 of its value in that amount of time. So that's just a couple of ways of looking at inflation. But the fact is, the Dow is an illusion, and it has to be seen as such. So when we're doing these webinars or presentations, my goal is to make people understand. It's not about just trying to make you buy gold. It's trying to get people to understand why gold should be bought, because this might be the most important chart or most important slide in the whole presentation, because the government and the media and all these elites are trying to make you believe that the dollar is money. Okay, you've been told that for your whole life. It's been the only form of exchange, in most people's lifetimes since 1971. Heck, even before 1971, people weren't really using gold to exchange anything because we only had the Bretton Woods in 1944. So it's been a long, long time since people actually were using gold for transactions. But the fact is, there's a big difference between money and currency. Currency is just something that you buy things with, but money is something that stores value. And I break this down by a definition of money, and just like anything else, it has parameters. So let's see if the dollar actually meets the definition of money. And you'll see that in number one, the two black pieces, yeah, it's certainly divisible. I mean, you can make change of a dollar anywhere. And it is fungible, meaning that every dollar bill you see is equal. If you go to one store, you give them $1. You go to another store, they'll give them $1. They'll both accept them as equal. But that's all. That's the only comparisons that you'll have between between the dollar and money that make any sense. Once you go down the line, okay, next we're talking about verifiable. Do we know how many dollars are outstanding? Because obviously, if they're going to have value, you have to understand how much of them exist. And not only do we not know how much they exist because the government, they stopped printing M3, for instance. That's the broadest measure of money supply back 5 years ago. But they're also printing money they're not even telling us about. Just last year, we found out that the Fed made somewhere between $16 trillion and $30 trillion of emergency loans during the first crisis 3 years ago. We didn't even know about these things. So there's a lot of money out there dollars out there that we don't even know that they exist. And then, of course, right under that, is it limited in supply? There is nothing less limited in supply because at least a few years ago, they needed actual paper and ink. You could run out of paper and ink. You could have broken machines. But now it's all digital. So dollars are unlimited in supply, and we have no idea how many exist. And we certainly know, just from the measures that are out there, that the number is going up exponentially. And then, of course, the Federal Reserve last week pretty much said we are going to keep printing money ad infinitum. So you know that the verifiable and limited supply are almost comical at this point. Okay, then you have medium of exchange, which you would say initially, well, yeah, I mean, use it to buy things. But the fact is, you only really use dollars to buy things in the United States. I mean, yes, you might be able to go to a third world country. They're dying to get anything except their, Zimbabwean dollars. But the fact is, you couldn't even go to London and buy things with dollars. You can. The only time you can buy things in Canada with dollars are when the exchange rate is at parity, which it happens to be this very minute. But as soon as it goes to 1.1, the Canadian cab drivers and grocery store owners say, we don't want dollars. We don't even know exactly how much they're worth. So dollars, and on top of that, now you're seeing a lot of countries that don't want to take dollars. You're seeing, and not just Iran, India, China, Brazil, Argentina, they're doing all kinds of currency transactions, both for commodities and for international trade, not in dollars. So as a medium of exchange, the dollar is far from universal, and it's only going to become less universal. And then the last one would be store of value, which, as you'll see in the charts coming up, and as anyone who's been holding dollars in savings for a long time with no interest rates, I might add, knows it's certainly no store of value. Okay, so here's a couple of ways of showing how it's not a store of value. And again, the term inflation, anytime, I mean, it's probably one of the most misused terms ever, because inflation does not mean a rise in the price of goods. It means the rise in the price of the money supply. The price of goods tends to be it's a symptom. I mean, if you have inflation, you eventually are going to have higher prices of goods. But the fact is, purchasing power is based on how many dollars are out there, which, of course, has been reflected in the cost of things we buy. Now, the top left chart shows since the Federal Reserve was created, which, by the way, was a midnight Christmas Eve vote in which very few people even showed up or even knew it existed. It was almost an unconstitutionally created organization, let alone that it's against the Constitution. But as you can see, $1 in 1913 purchases about 2 cents today. And at some point it's going to be zero. Maybe this year, maybe next year, maybe 3 years, 5 years, who knows. But it's going to be soon. On the top right, I show the dollar index. Not so much, I mean, obviously I noted how I don't think it matters at all. It has literally no meaning in the world unless you are traveling this week to London or to, I should say, to Paris to go on a vacation. But you'll see that since literally the middle of 2004, the dollar index has been in a trading range. 70 is the all-time low, but it's essentially been between 75 and 85 for 7 or 8 years. So there's been a lot of propaganda that goes into the media saying every time gold falls, oh, gold is down because the dollar index is up. But the fact is the dollar index has gone nowhere for 7 or 8 years. And then you look at the very right of the screen. It's that the same thing I mentioned before. The fact is we are literally at the point we could wake up tomorrow, or probably on a Monday because they like to do things on Sundays, and there'll be no euro. They could disband the euro completely. That's how close to the edge Europe is right now. And yet the dollar index won't go up against the euro. That's how bad the dollar is right now as a currency. And obviously, generally speaking, against the euro, it peaked back in 2002, and it's down 35 or 40%. Okay. So now then you have other ways of looking at inflation, such as the Dow to gold ratio. Again, it's kind of arbitrary because the Dow is just 30 stocks, and it's 30 stocks that change all the time to suit the biases of the people in charge of it. But the fact is, it is a widely watched metric to see how it's been doing versus gold as a ratio. And if you look at 2000, January 2000, that was actually the all-time high of that ratio. That was when we had the tech bubble. The Dow was about 14,000 or so, and gold was $250. But since then, it's been coming down very, very steadily. It's down to about 7, and it's, in my opinion, a no-brainer to go back down, to 1 or below. And as you could see on the chart on the right, whether you have a deflation like in the Depression of the 1930s, or a major inflationary event like in the late 70s, gold will catch up to the Dow. It may be arbitrary, but the fact is gold is going to be increasing in value dramatically compared to a bunch of multinational companies that have all kinds of currency and economic risks. So I'm quite confident that we'll be back to that 1 range at some point soon, maybe very soon. Okay, as part of the education process, I am trying to dispel myths, and there are plenty of myths. There is no sector where there is worse information. I mean, some of it is just plain misleading, some of it is ignorant, some of it is plain is propaganda, and some of it is full-out lies. And again, some of it is just twisting terms. Just by saying gold is a barbarous relic, in a negative way, it kind of implies something bad about it. Now, gold is a barbaric relic is one of the silliest things that you'll hear out of the sector, but it comes all the time out of Wall Street. It comes from John Keynes, okay, who is he created Keynesianism. Keynesianism means big government, whether it's monetary or fiscal. He favors big government. So obviously, gold is the enemy. Gold wants small government. And if it's such a barbarous relic, I would say to someone who's bringing this up is, why are the central banks all buying it? Yeah, they were selling it back when times were good 10 years ago, but now there's not a central bank on earth that's selling it. Even the United States is not selling it because it doesn't have any more. So you're talking about major purchases right now. They are out overt, out in the public. India is buying, China's buying, Russia's buying, the Arab nations are buying. A lot of the smaller nations that you'll see here and there, Venezuela, South Korea, Vietnam, you name it, they're all buying it. So it clearly has some kind of use. Now, then the people will say things like, you can't buy groceries with gold, but then again, can you buy groceries with stocks or bonds? You can't even buy groceries with euros in America. It has nothing to do with again, it's that definition of money, okay? Money doesn't mean that you can go to the store and buy something. It means it's something of value. And gold right now is probably the most liquid, universal asset on earth. You can always go to a coin store. You can go to Miles Franklin. You can go to eBay. You can go anywhere, and you could sell your gold and get as much cash as you want to buy groceries. And on that line, people say, they literally will say, and they've said it to me many times, yeah, but you can't eat it, but I mean, I don't even know what to say to things like that. I didn't know that you can eat stocks or bonds, and I didn't know that the only things of value in the world are things that you can eat. When there was a real estate bubble, no one said you can't eat houses, but people actually say this stuff to me all the time. I get a lot of emails. And then finally, it's a worthless piece of rock. And I agree it is a rock, but it does have a price in the market that is the most liquid market in the world, and is the only one that I know that trades 24 hours a day. So I don't think it's worthless. And by the way, it does have a cost of production, which is well documented for the last 1,000 to 5,000 years. And now we talk about some of the kind of financial lies that get out there. One is that, yeah, but it doesn't keep up with commodities. Because, yeah, I mean, there are times when certain commodities may have had movements. You look at rice had a big move last year, and cotton had a big move at one point, and coffee had a big move. And every time it does have a big move, you see someone saying, look, gold's not keeping up with it. But the fact is, in the big picture, gold has been destroying the CRB index, which is the most widely used commodity metric out there. It's up since the beginning of the bull market. It's up 5 times. Silver is up about 5 times as well. So that's definitely a lie. And an even bigger lie is that it hasn't kept up with monetary inflation. Now, this is a kind of a mixed lie because we only have the M2 ratio out there. That's the broadest money supply that the government will publish right now. Now, according to that, yes, gold and silver have more than kept up with monetary inflation. Of course, M3 was stopped back in 2005, and if you can believe it was because the government said it costs $1.5 million a year to compile the data, and therefore it's too expensive for us to do. That was their excuse. Meanwhile, they're now printing something like, I don't know, $30 or $40 billion a day of debt. So against M3, whatever that may be right now, gold may be keeping up, it may not. But then there's what I call M4, which is M2 plus M3 plus all this other stuff like the $16 trillion of loans that were not told about. Not to mention, if you remember 2 or 3 months ago, just when Europe was about to collapse, they announced the Federal Reserve announced its swap facility, wherein it would lend money, basically unlimited money at less than 1% interest rate to any bank in Europe that wanted it. Now that money is, because it's called a swap, is considered off balance sheet. So that wouldn't even get into an official ratio. Just like our U.S. debt right now is $15.4 trillion, but they consider Fannie Mae and Freddie Mac's debt off balance sheet. That's $5 trillion. Some reason the market gives them a pass on this blatantly obvious debt, which they just decide to call off balance sheet. Just like our wars are not considered budget items. So when you see Obama put out his ridiculous budget today, which will never get passed, it doesn't include war, which happens to be a pretty big expense for us. Now, the biggest lie for people who are trying to get you to not buy into the sector, well, certainly not to buy the physical side, is, oh, it's so hard to buy. Yeah, I mean, where would you do? Well, you go to a coin store, you buy a coin. How would I possibly get this stuff? It's so complex. And there's nothing more simple than doing it. I started buying physical back in 2008. I learned how to do it in so many different ways, from bullion dealers to online auctions to going to the coin store. There's pros and cons of each of these things, but the fact is, no matter how you do it, it's very easy to do. Aside from bullion dealers like Miles Franklin, which you can just give us a call and lock in an order immediately, and it's insured, and we can even put it in these depositories, either in Canada or the United States. It's seamless, it's cost-free to do most of these things, and it's absolutely, you know, a simple experience. And then, of course, you have these audited closed-end bullion funds, like the Sprott funds, like the Spicer funds, like Central Fund of Canada, where you can buy actual gold via a fund. There's pros and cons of those things, but the fact is, you certainly can do it, and by doing it, you're going to be increasing demand for gold and silver in the world, because when the premiums of those funds get high, then the funds just go out and buy more gold and silver. Well, I said that the most important slide was trying to get people to understand that gold is actually money and not currency. But the other most important slide is probably this one right here, because there are so many people out there in the world that are trying to screw you in one way or another, mostly because they want your money. Now, the governments want your money out of the gold and silver sector. They're happy to have you invest in things that they've created to fool you into think you're buying gold and silver, and that would be particularly GLD and SLV, the two big ETFs, which are, you know, when they're on TV on a financial network talking about gold and silver, they're actually always talking about GLD and SLV. That's what's always showing on the screen, crossing your screen if you have CNBC on. So people tend to think that this is actually gold and silver. Now, these funds, in my opinion, from watching them, one's been around since 2006 and one since 2004, I believe these funds have been created to get you out of real gold and silver and to make you think that you own the real thing. If you look at their prospectuses, they have loopholes which are so giant you could drive a truck through. I mean, I listed a couple of them here. This is the same for GLD and SLV. They are never required to be audited. Never, ever, ever does anyone, any auditor, any government agency go to GLD and say, let me see how much gold you have, or SLV, how much silver you have. There is no prohibition against leasing. So just like the U.S. government is allowed to lease their gold and silver out, of course they'd never tell you. They don't account for it in their accounting. But these guys can just go out and lease it out. They can naked short sell their own shares, and they do it all the time because the short interest is dramatically higher than the amount of bullion in the fund. And of course, you look at who the fund custodians are. They're J.P. Morgan and HSBC, who have been, particularly J.P. Morgan, who have been sued countless times. They're in the middle of numerous lawsuits for manipulating lower the price of silver and gold for HSBC. They also are allowed, by the way, to send the gold and silver to sub-custodians. And those sub-custodians don't have to be audited either, nor do they even have to tell you who the sub-custodians are. So in my mind, if you are buying SLV and GLD, there's a good chance you're going to wake up one day and see them dramatically lower and having absolutely no connection at all to the price of gold and silver. But on top of that, you're also losing, just like by owning dollars, you're losing to inflation. By owning GLD and SLV, you're actually gradually losing value versus the actual price. If you see the chart here, you'll see gold. You'll see that it's 0.97 is the ratio, meaning there's a 3% discount of the GLD fund to the actual price of gold, and you could see that it gradually goes down over time. As with silver, there's a 3% discount gradually going down over time. And I assure you that that discount's going to get wider and wider as time goes on. So even if they were not found out, even if the big scam didn't get found out, I can guarantee you that this is going to continue to dribble down versus the price. Now, what really worries me, and what I'm talking about with warning you, is what can happen to one of these funds. Now, USO is an oil fund. It's an ETF, which has the exact same mandate as what GLD does to gold. Its job is to track the West Texas Intermediate crude oil price. And as you can see, and I can only get three-year charts here, it has plummeted. It now is about 38% of the value, to the point where I've taken it off my screen, USO, because I have no way of knowing how it, what the price of oil is doing by looking at it anymore. It was, when it came out back in, I think, 05 or 07, it was at 100%, and it went down gradually like SLV and GLD did, and then all of a sudden, bam, it just plummeted. So this is what can happen if you buy an ETF. And, of course, you don't own oil here, and you certainly don't own gold and silver with those ETFs. So now I'm trying to inform people, first, okay, you can buy gold. Now here's some, concepts of why you would own it versus, certainly versus paper gold and silver products, and even versus money. Now, if you own gold yourself, you have the security of having it yourself. Whether it's in your house or whether it's in a depository, that you have it. It's your personal ownership of money. There's no bank there, and I wrote under it, lack of middlemen, because there's no one between you and your money. And it's, of course, very liquid. You can take it to pretty much any coin store, any online auction, any bullion dealer, even take it around the world, and you could sell it. Now, the cons of gold and silver ownership, physical, that people get worried about are certainly personal safety. You have to consider, if I have it on me, I have something valuable. And if you have large amounts of it, it takes up space. It could have fees if you need to store it somewhere else. And it's very heavy, so it's hard to move around, and if you need it to move. So all these things have to be taken into consideration. But, then you have the pros and cons of keeping your money in cash, which is depreciating to inflation, and in banks, which are, on the verge of collapse constantly. Again, if you want to buy gold and silver, or platinum, or palladium for that matter, you can buy them several ways. Now, if you go to a bullion dealer like Miles Franklin, you'll get the widest offering of products out there. Pretty much anything in this business we have. If you wanted, I guess if you wanted, 5,000 or 10,000 ounce bars, you might have to go somewhere a little more industrial, like the mint itself. But aside from that, if you want to buy 100 ounces, 1,000 ounces, 10 ounces, 1 ounce, if you want to buy numismatics, you want generics, you want mint, government mint issued, we can get all that stuff for you. We can also help you to secure a vault storage program in the United States or Canada. And of course, when you work with us, you get personalized service of any kind you need. Now, local coin shops certainly work as far as buying coins, but when you go there, they don't generally have a lot of selection. You certainly can't buy in size. It's not like you're going to go in and say, I want $250,000 of gold, because they probably are going to have very little on hand. And excuse me, you'll probably have limited payment options. Most coin dealers, coin shops, I should say, only accept cash or a cashier's check, in which they can actually call the bank when it's open. So there's not many options. But yes, if you want to get a few coins, liquidity buying or selling it, they're very convenient. And then there are online auctions for buying and selling, which are also convenient. But you have a lot of counterparty risk when you go online, so you have to be very, very careful at what you do. Actually, Miles Franklin is the largest high-end, meaning large size online auction group doing precious metals in America. But I would say most of the people that we deal with through the auction, actually they see us on eBay and then they call us, because when you're talking about large sizes, and I'm not even talking about millions, I'm talking about even 100,000, people are reluctant to take the counterparty risks that you're going to encounter online. And pardon my voice. Again, I was talking about GLD and SLV are the ETFs, which are very risky because I don't believe they even have the gold and silver in the funds that they say they do. But there are paper products, which I don't want to say endorse, but I know the people who run them, and I believe that these are honest funds. So for people who are scared to buy physical, actually buying the physical, I believe that these are good ways of holding paper gold and silver, keeping in mind, of course, that when you own securities, you have all the risks of securities. You're going to have the capital gains tax calculated by your brokerage. You're going to have a risk that the brokerage can fail or that the banking system can close or a bank holiday. So they're certainly not foolproof. But the funds here, there's 2 funds that are run by Eric Sprott's group in Canada. He's a very reputable guy. PSLV is a silver fund. PHYS is a gold fund. The other 3 funds are run by Stefan Spicer. The first fund, CEF, Central Fund of Canada, has been around for 60 years or so. G2 and SVRZF are their newer funds for gold and silver. And these funds, again, they're not ETFs, they're closed-end funds. The only way that they ever change the amount of gold and silver of the fund is by doing an offering and then buying the metal. Okay, these things are audited, and they are not allowed to lease the gold out, and in the case of the Sprott funds, they're actually redeemable for actual physical gold and silver. Unlike the GLD and the SLV, which trade at discounts to the price of gold, these funds all trade at premiums. They all have for as long as they've been around. On average, they're probably about 5% premiums now, and they have been as high as 30%. In fact, the PSLV fund was over 30% about 2 weeks ago before they did an offering, meaning there was people who wanted size because there's not that much silver out there were buying that fund because it's redeemable, and at some point they may wind up taking the silver. So again, it's not a matter of I prefer physical versus paper because there are some people who this is the only viable option. I think the safest way to own gold and silver is the actual physical form in your own possession. But if you can't do that, this is the second best way that I see. A couple more slides, and then we'll get to the questions. I wanted to mention the gold-silver ratio because it's a guidepost that has been looked at for as long as I've been watching to see not just the relation of value, but just sentiment in general. Because people tend to see when the ratio is going up, it's viewed as people being nervous. That means they'll buy gold versus silver. Whereas when it goes down, it's viewed as people feeling more comfortable with the sector. I'm not sure if I believe that that's true. I mean, yes, we've seen the ratio go up during some of the difficult times of the last few years, but a lot of that is manipulation in my opinion. You'll see that the historical average is actually 15 to 1 if you go back thousands of years. I should say maybe 1,000 years, but it's been 62 to 1 since the 1980. So we're around the midpoint range of where we've been over the past 30 or 40 years since we've been off the gold standard. But it's been gradually coming down over the last, I'd say 5 years. I mean, we were up at the 80 range for a while, and now we're down at the 50 range. We even hit 30 to 1 about a year ago. And again, that average of 15.1, that is based on the amount of silver that has come out of the ground versus gold over the years, meaning hundreds and hundreds of years, for centuries, you'd have production of about 15 ounces of silver for every ounce of gold. And that was pretty consistent for centuries. Now that ratio is closer to 9 to 1. But more importantly, all of the gold that's ever been produced is still in existence. It's not consumed for anything. The major usage of it is jewelry, so it's clearly not consumed. It's just in another form. Whereas almost all of the silver that's ever been produced is gone. The estimates now, and not just from one place, from many places, is that there is less than 1 billion ounces of above ground silver in the world right now, which is worth only about $30 billion. And I've heard estimates as low as 600 million ounces. I know the U.S. Geological Service predicted it would be the first extinct element on the periodic table a few years back. So not only do you have the monetary element of silver, but you also have it as it's the second most used commodity on Earth, and I believe that those usages are only getting higher. So you may run out of silver compared to what's being produced just from industry, but you know what's really going to move the price is going to be the investment demand. So just keep in mind that gold-silver ratio. My target price for silver really has less to do with an actual absolute price, but that ratio, I believe it's going to go back to the 15-to-1 ratio at the least at some point in the next few years. It may even go lower when people realize how little of it exists. I wanted to also give just one slide about platinum because it's a bit enigmatic. People don't realize much about it. It is a precious metal, as is palladium, which is an even lesser known precious metal. But as you can see from this chart, it's a very, very small market. Even compared to the gold market, it's tiny, tiny market. And almost all of that platinum is used in catalytic converters in cars. So you have such a small investment market that it's literally at any given time very hard to find them. I don't even think they've issued any American Platinum Eagles in years simply because there's not enough platinum out there. So these are very limited in supply. They trade at very high premiums to the melt value. And I wrote that last bullet on the bottom because the price of platinum has tended to be 20% higher than gold on average over the last, 40 years. But just recently, it's gone under the price of gold. It's about $100 an ounce less. That's the first time we've seen that in probably at least a decade. So, some people are going to question because, yes, it is a precious metal, but it's not monetary. It has never had, you've never had monetary systems based on it like gold and silver. So there are some questions as to will it hold its value as well as it has in the past 10 years if we have a major economic breakdown. I'm still on the fence about that. I sense it's going to go up with gold and silver, probably just at a different rate. I'm not sure what that rate is. But, do your due diligence about platinum. We'll be happy to answer any questions you have about it, simply because it's a stranger market and it's not for everybody. I think I have maybe one more slide, and I want to talk about our depository storage. We are one of the only dealers that offers such services. They are insured. They are in depositories, which are not banks, which is very, very important because if I was going to add one more slide, it would probably be to say, not only don't put your cash in banks, but certainly don't put your gold and silver in them, because anything that's in a bank becomes government property. I shouldn't say property. The government can take over the bank and kind of do what they want inside those banks. So we value the fact that we have our depositories that are not in the banking system. We've been doing one in Fargo, North Dakota, with that's around where our primary distributor is for a long time, and we've had great success with that. But more importantly, we just started this program in Montreal, Canada. It's a partnership with Brinks, which is one of the most famous security companies in the world, and I'm very high on this product because a lot of people in the United States have fear about political risk, about what the U.S. government might do when the dollar starts to lose value. Whereas I believe personally that Canada, while having political risk just like anyone else, probably has less than most. They have a very, very liberal society about precious metals and the value of money compared to the United States. And because it's at Brinks, it's a securities company, it couldn't be further from the banking system. We do have options for people who have IRAs in both of these storage facilities. In the United States, it's gold, silver, and platinum. In Canada, we just got approval to have silver eagles, not gold, but silver eagles in IRAs stored in the facility in Montreal, and we're very, very happy with our partnership with Brinks. In conclusion, before we go to the questions, again, it's my job to work as Miles Franklin's marketing director. But my mission and the reason that I came to Miles Franklin is to help educate people so that they understand why they need to own gold and silver. And now we'll take your questions. Keep in mind, this is the first time we've done this, so I have to take a look through the questions, the question log, and see, and Andy and I can, we'll try to answer all your questions. Are you there, Laura, Andy?
I'm here, yes.
Because I don't see any questions in the queue except for one, which I can answer right now. And this question is from Peter. And he says, it seems that those controlling the prices have become more powerful, obvious and blatant each day. And under what scenario do I see that these prices would, be kind of broken from this control so that they wouldn't be capped on the upside and slammed on the downside? And there's no particular time frame. I just think that we're closer to it each day. And I've been writing for quite some time now about almost quantifying how blatant they've been by how often they've been doing things and the manner that they've been doing things. And it's very encouraging to me because it seems like they're getting much, much less bang for their buck. They're doing things much more often and much more intensely, and yet the price of gold is 5% from its all-time high. So I believe that what's going on in Europe with Greece and the whole banking system, as well as the debt situation here, is going to make it very, very difficult to keep the masses from realizing that gold is money in the very near term. But I could never say when exactly.
I'd also, Andy, like to just chime in on one thing from this side of the table that I think is very relevant, and I think people need to understand that it is my belief that this market ultimately will be defined in two ways. Will be defined by rising prices, but more specifically by lack of available product. Oftentimes we hear people say to us, should I wait for the pullback? Do you see a pullback coming? Should I wait? My answer is simply this. If we go back to 2008, the last time we saw a real big pullback, or the first time we saw a real big pullback, gold went from 1,000 to 700, and silver went from 21 to 9. And those are pretty substantial pullbacks, happened within a 30-day period. And over that 30-day period, every major mint in the world was either shut down or delayed anywhere from 16 to 20 weeks. The U.S. Mint was shut down 6 times in 2008, and since then have not made a platinum eagle, hardly made any gold buffaloes or any fractional eagles. The Canadian Mint and the Austrian Mint in 2008 were both working 24 hours a day and were 16 to 18 weeks back ordered. The Perth Mint in Australia shut down in July or August of 2008 and took no new orders. And for the first time ever in the history of the South African Rand Mint, they ran out of product as one wealthy Swiss businessman drained them of everything they had. As the prices were falling, there is a distinct disconnection between the price that's quoted on the COMEX or the CRIMEX and the reality of getting real product. And if I could hammer home anything, it is this. Bull markets generally attract people because of greed. Gold bull markets attract people because of fear. And with all the business we're doing, 1 out of every 100 orders is a buyback. Out of 180 million or so in business last year, we did under $1 million in buybacks. Nobody is selling. Everything we sell is brand new product. And if I had to make one prediction about how this market will finally express itself, it'll be that there will be nothing left to buy when everyone is rushing to get in. So I guess from my side of the table, economics aside, the biggest issue that we will face, I believe, going forward is lack of available product. And I think that's something that really, really needs to be hammered home because we're seeing absolutely nothing in the secondary market at all, across the board from all of the company sources that I talk to, not just ours. So bear that in mind. If you're out there and you're waiting for a pullback, keep in mind the last couple times we've seen pullbacks, our business has increased exponentially, the premiums have increased exponentially, and the delivery delays have increased exponentially. So do yourself a favor and realize that the physical product has unto itself a life that is separated from the price that we see quoted on the paper every day.
And I'll add to that. And by the way, we do have questions. We're just kind of sorting through, the webinar process here. It's not only when prices go down where we see that kind of demand. And I've been writing this for some time about how I think the cartel is boxed in, because when silver, for instance, went to $50 an ounce back in May of last year, the same thing happened with the industry. The industry ran out. I remember seeing on some of the websites silver going for $65 an ounce for immediate delivery. And I know that we had at Miles Franklin some of our busiest weeks ever. And that was on the upside. So you have the greed up there. But again, like Andy said in 2008, as well as September, just a few months ago when we had what I call Operation PM Annihilation, we had some of our busiest weeks ever as well. So if they try to push the price down below 30 too far, you're going to see the same thing happen as what happened in September. And once it starts to go the upside, you're going to see the same thing happen as what happened last August. So fear and greed, but ultimately it's going to be fear that's going to drive most of everything. So
Andy, I can't see any of the questions here, so if you'd like me to answer any questions, just please read them off to me and I'll be happy to address them.
Yeah,
I can
Laura.
go ahead with that. I have all of them here. I'll go with the next question here.
Okay,
by the way, everyone, hello. I'm Laura. I'm helping organize this webinar. I'm an office manager here at Miles Franklin, and I also edit the newsletters. And let's get on with the next question. The question is, with Warren Buffett bad-mouthing, the FBI threatening, and general news articles on gold taxes, don't you think QE3 is coming and they need to get the public out of gold?
Right. Well, for people who've been reading me for some time, they know what I think of Warren Buffett. In fact, I wrote about him just maybe a day or two ago. He is the consummate corporate crony shill. I really believe in many ways he's almost an officer of the government at this point because, again, I talked early on in my presentation about the Dow Jones Industrial Average and gold as, among the very, very few things that the average person can relate to in the financial world. Warren Buffett would be another person. It's kind of like, when you talk about pop, you say Michael Jackson. When you talk about finance, you say Warren Buffett. So the average person just thinks of Warren Buffett, oh, he's the, quote, smartest investor of all time. So anytime he says something, you should be listening. But Warren Buffett has been someone who, long time ago sold his soul to the devil. I won't even go into how he once had 140 million ounces of silver and then somehow prematurely sold that silver just as the SLV ETF came out with 140 million ounces of silver. This is a very bad man who is kind of behind a lot of the schemes to prop up the confidence in the markets. I remember back in 2008 when the government said that when he all of a sudden took positions in General Electric and Goldman Sachs just as they were about to go bankrupt. And all of a sudden, the next day, there were these stock offerings. Confidence was restored. I mean, this is the man who invented the term weapons of mass financial destruction for derivatives. And then we're supposed to believe that he's buying General Electric and Goldman Sachs, or two of the worst derivatives players ever, let alone his coming into Bank of America just as it's about to go under $5 an ounce. So, yes, I agree completely. The goal of using Warren Buffett is to try to get people out of gold and silver and into stocks and bonds, but do not trust one thing that guy says. Next question.
All right, Andy, do you have anything else to add to that, or shall we move on to the next?
I think we'll move on. I think that was well stated.
All right, thanks. All right. Next question. Do you foresee metals confiscation or windfall profits tax in the U.S.? I'm interested in having some stored in Canada with your storage facilities. I live in South Carolina, and I understand they are considering gold and silver to be used as alternate currency. If so, will federal cap gains tax apply?
Well, let me answer the first part, and maybe Andy could answer afterward. As for windfall gains, absolutely. I believe, and this is particularly relevant to people who own mining stocks, because I believe eventually the mining stock sector will be absolutely decimated once these windfall taxes and nationalization issues come around, and that's why I don't invest in them anymore. As for confiscation of gold itself, I worry about many, many things in the world right now, probably more than most, and frankly, that's probably the least of the things that I'm worried about. Yeah, they certainly can make decrees of all kinds. FDR in 1933 decreed that gold was it was being confiscated, but people didn't bring it back and they didn't enforce it. The only gold that they got when they confiscated per se was by going into safety deposit boxes at banks and taking it. So for one, I don't think they'd ever get it from people. For two, I don't see the reason to do it. In 1933, there was a gold standard. There was an actual monetary reason to try to confiscate it because you could print more money if you had more gold. Now there is no gold standard, and frankly, there's very, very little gold in the United States. Even if they were to get every ounce of it, it would mean nothing. It would be a pittance. It would have no impact. And, of course, any kind of announcement like that would make the international price of gold go up about 10 million times overnight, which would only make confidence in the dollar go down. So I don't believe that that's a risk. I certainly believe they can make all kinds of decrees, like let's say they said, well, we're going to make it illegal to just to use it or to hold it. Okay, well, if they do that, it probably means the dollar has already massively collapsed and prices are soaring. So you can make the choice of whether you want to hold something that's worth something or hold something that's worth nothing. So
I'd like to answer that as well. There's a term, I believe it's called Occam's razor, and Occam's razor says when you have a tough question to answer, it's generally the most obvious of outcomes that is the probable answer. I like to think that the reason the GLD and SLV were created was for the government to have kind of their option of last resort. If you look at GLD, it's roughly the third or fourth or fifth largest stockpile of gold in the world. And it's administered by HSBC, one of the most crooked banks in the world. And SLV, the largest single stockpile of silver in the world, administered by JP Morgan. If that isn't the fox guarding the hen house, I don't know what is. But if you look at the prospectuses of those two funds, in particular, if you own them, I implore you to read pages 6 through 12 of the prospectus titled Risk Factors. And in those risk factors, if you actually read them, it'll blow you away. If you don't sell your fund by the time you're done with page 12, I'll eat my hat. But the bottom line is this. The government could come in and confiscate those two funds, because in the prospectus it says unless you are one of the groups that created a basket, which is, I don't know, 1,000 ounces of gold and maybe 20,000 ounces of silver, some huge amount, you cannot repatriate your funds in the metal. You can only take it back in cash. So the government could come in overnight on a Friday night. Let's say you have $1 million in GLD and $1 million in SLV. They could close down those two funds, nationalize them. You'd wake up Monday morning, you'd have $2 million in your money market account. And they could look the world in the face and say, now wait a second. We didn't activate eminent domain. We did not confiscate citizens' assets. In fact, it says right in the prospectus that none of these people can take possession of the gold or silver that is in GLD or SLV. It's only a price representation. So they could come in, be sitting on the world's largest stockpile of silver and the third or fourth largest stockpile of gold without violating any civil liberties or infringing any laws, and not risk further damaging the world reserve status or the center of free trade status that the U.S. has. If all of a sudden the United States government activated eminent domain and confiscated gold when countries like communist China openly promote it and endorse it to their citizens, now through the Shanghai Gold Exchange and through the Agricultural Bank of China, it's game over for the United States as world reserve currency. We would never again be able to sell our treasuries to any of our creditors. It would be a mass exodus on the dollar, and really, as far as I'm concerned, confiscation is a checkmate move at best, and I can't really see it happening any longer. Really what it is it's an opportunity for companies like mine to try to scare you into buying high-priced numismatics. And just as an adjunct to that, I would like to say this, and I think this is very relevant to that discussion. Right now, in fact, we're going to send a postcard out to everyone on our mailing list. Right now, Circulated numismatic gold coins are the best value I have seen in 22 years of business for one reason and one reason only. You can now buy them for the same price as gold bullion. I have never seen that in $3+ billion in sales in 22 years of business. I'm not talking about the high-grade stuff that a lot of companies will try to get you to buy and tell you you're safe from confiscation. I'm talking circulated $10 and $20 gold pieces that, according to the legislation, are still exempt from confiscation. But because the focus in this industry for the past 2 years has been so bullion-centric, everyone wants bullion and no one wants the pre-33 stuff, for the first time ever, and I've been around the block for 22 years, you can buy circulated $10 and $20 gold pieces at bullion value. In fact, you can buy the $10 Liberty for less than a half-ounce gold eagle, $10 Liberty being a half-ounce coin pre-1907. But in reality, to answer that question, I don't see confiscation being an issue. It would create a run on the dollar of epidemic proportions. When they have GLD and SLV sitting there with a pink bow wrapped around them, sitting in a vault administered by JP Morgan and HSBC, it's the perfect solution to a problem without creating a run on the dollar and a panic in the worldwide markets. Yeah, but for those of you looking for a good deal, these are as good as they get right now.
And keep in mind, even if they were to try to confiscate, it's a pittance, the amount of gold and silver in the world compared to the amount of dollars and euros and yen. It's a giant confidence game, and any kind of announcement like that, like Andy said, breaks the confidence. There's no amount of gold out there that can get them out from under all the debt they've created. It has nothing to do with being a solution. It's all about confidence, and the absolute worst thing that they could do for confidence in the dollar and other currencies would be to try something like that. So, next question, please.
All right, the next question is, what ratio of gold to silver should one invest in? Every ounce of gold to be equal to about 2,000 ounces of silver that you own? That is the next question.
I think that is way too high of a ratio. I personally, although it wasn't intended this way, I personally own 40 ounces of silver for every ounce of gold that I have. The bottom line is simply this. Gold and silver have nearly a 90% correlation in history in movement between the two. So as one goes, so will the other. However, silver is a much smaller market, will be much more volatile, will be much more bumpy. But as far as I'm concerned, you own enough of it, silver will make you wealthy. Gold will be much more orderly in its ascent. But I think 40 or 50 to 1, to me, is a good ratio. Andy, I don't know how you feel about that.
Yeah, I agree, because you have to understand, especially if you're not someone who's used to owning gold and silver, the volatility of silver. And again, silver is volatile because it's manipulated. It's not volatile because it's inherently more volatile. In fact, gold and silver should be the least volatile assets in the entire markets because they are simply money. But the fact is, silver, at least as long as I've been watching it, moves in giant moves in different directions. And if to have it, you can't really look at it like it's investments. Like, well, I'm going to buy silver at 20 and then it's going to go to 50. You're buying both of these things because they're going to protect the value of your assets. One may go up more than the other. Over time, certainly silver is going to go up more than the other. But the most important thing is security. And particularly when you're new at owning bullion, you're going to feel very, very comfortable by having a nice percentage of gold. And as you get more comfortable with the sector, then you can increase your silver gradually. But then again, you look at what happened in May last year. I mean, right now I'm 2/3 gold, but in May of last year I was more silver. So it's something that's a moving target all the time.
One other thing to consider,
yeah.
You could put $20,000 worth of gold eagles in your two front pockets, which would be about, I don't know, 7 coins in each pocket, and you could walk around town all day long and no one would know you're carrying $20,000. The $20,000 worth of silver is going to be pushing 60 pounds. So logistics become an issue with silver, but as far as I'm concerned, silver and gold should be somewhere in the 40 to 50 to 1 ratio for accumulation. At least that's how it's always worked out for me.
Right, and of course you have to realize why you're buying it. If you're just storing value, if that's your only goal, well, then you can have a lot more gold. But if you are thinking in terms of we're going to need to be bartering, obviously silver is much better for bartering because it's less in value. So you just have to gauge all of these things that Andy and I are talking about in your decision. But definitely don't look at it as, oh, I'm just going to buy more silver because it's going to go up more, because you really have to put all these different factors into your decision. Next question, please.
Okay, this is actually a topic we were talking about here in the office today. Someone is asking, what about having copper in your precious metals portfolio? Andy, both of you, I'm sure, have specific opinions on that one.
You want to go first, Andy?
Well, yeah, if I were going to buy copper, I guess I would buy it. I wouldn't buy it. In fact, it's funny, we received a promo today from a company who just sent me 4 copper coins saying copper works great for barter and coin cards and all these things. To me, the only copper I've ever owned is in Freeport-McMoRan stock. It's one of the best stocks I've ever owned. I don't own it any longer. I don't even know how well it's doing. It's always been a good stock, but to me, copper it's too inexpensive and too bulky to own as a physical metal. I would defer to silver and gold and platinum and palladium long before I would ever own any copper. But Freeport-McMoRan has always been a good copper play, and if I were going to do anything, that would probably be it.
Yeah, and it comes down to me as far as I showed you the definition of what money is, and copper doesn't meet the definition as well as gold and silver, and that's why there's never been a monetary system in history that's been based on it. It doesn't have the physical properties that allows it to endure without rust, that kind of thing, that gold and silver do. So, I mean, yeah, there are ways, I'm sure, of safeguarding it better than others, but for the most part, it's not a precious metal in any way, shape, or form. It's an industrial metal. I would probably rather own it than dollars, but it's, you can't think of it as money. That is truly an investment if you can own it, and there's not that many ways of owning it. I'm not sure if there's even a copper ETF or anything like that. You would actually have to own big, bulky copper coins. So,
I know the Chinese buy 4 times as much copper as they need for annual consumption because they view it as money, and on a very large scale like that, you could argue it's money. But I think in terms of liquidity, good luck trying to go sell a chunk of copper to somebody, whereas a 1-ounce silver coin or gold coin is immediately liquid wherever you go, whatever city you're in, whatever town you're in, whatever country you're in, it's immediately liquid. But a chunk of copper, I think, is something that really has no place in anyone's immediate portfolio.
Laura?
Next question.
Yes, next question here. There are several questions in our queue regarding confiscation. Basically, do you think gold and silver will be confiscated, and a few questions about will they be confiscated out of precious metals held in IRAs?
Well, let me answer that one.
Yeah.
Again, and Andy, you can chime in too. Again, we talked about that just a moment ago, and I think the ETFs are the prime target for confiscation. You can't take possession of the ETF gold anyway. It allows them to have all the gold centrally located and silver easily confiscated. Everyone paid back in brand new $100 bills. No laws broken, no civil liberties infringed. It's a perfect deal. But I would say this, that IRAs held in particular at Delaware Depository make me nervous. Now, I don't speak poorly about Delaware Depository. I know nothing about them that would make me say that, other than to say that most of the IRA companies, whether it be Sterling Trust, American Church Trust, Entrust, New Vision, any of the companies that allow IRA precious metals, they all established themselves with Delaware Depository. And if you want to talk about one single target that holds the majority of the IRA money in the United States, it is Delaware Depository. So there is something called, I believe it's called Passport IRA. It's a group that I see at all the Casey conferences, and it took me many years to get involved with Casey research. Doug Casey and his group are as fine an institution as I have ever worked with in 2 decades, and it took me a long time to get in their good graces, and anyone who exhibits or speaks at their shows has to go through a rigorous screening. Now, these guys are always there, and what's so interesting about, I believe it's Passport IRA, is that it allows you to become your own custodian. They set up an LLC for you for about $2,500. Once the LLC is set up, you become the custodian of your metals. You take possession of it yourself. That, to me, is a better alternative. But as a footnote to all of this, I'm 41 years old. When I was 39 years old, 2 years ago, I cashed out an IRA north of $500,000 that I had accumulated through 20 years in this industry. I paid a $50,000 penalty, and I paid nearly $250,000 in taxes, and I didn't lose a minute's sleep, because where I come from, the likelihood of taxes going higher and of shenanigans of some sort happening in IRAs, whether it be forced nationalization or forced, to some extent to buy treasuries to support the plummeting dollar and rising interest rates, the likelihood of those things happening to me were greater than them not happening by the time I would access my money in the next 20 years. So if you're going to have money in an IRA, consider Passport IRA, taking possession of it, and be cognizant of the fact that, IRAs are a target for the government if things start to go very bad. So I'm not a big IRA guy myself.
And for the people listening, there's a reason why I work with Andy and David, because we all think alike. Andy and I are only about 3 weeks apart in age. I did the exact same thing as him about a year and a half ago. I cashed out everything. I paid all my taxes and fees. And I have been writing about this topic incessantly. In fact, this is like a softball question. My rant that you'll see tomorrow is titled Retirement Plan Confiscation. I've written about this probably 3 times since I started here. I am as confident in this topic as anything that I talk about. I believe one way, shape, or form, if you hold any kind of government-sponsored retirement plan, you are going to have it confiscated. Whether they raise the age that you can take it out, or raise the taxes, or raise the penalties, or force you into government treasuries, or do all kinds of things. I can almost with 100% certainty say that if you think that you're going to hold that to 59.5 with the same taxes and be able to get your money out, then you're delusional, because you talk about a target. There's a $15 trillion debt in this country right now, and there's $15 trillion of retirement plans right now. So, end of question.
Yeah, good one.
Okay, great. Let's do one last question. We do have a long queue of them. We can answer the remaining ones in our newsletters. But for one last question here, what will you recommend, bullion or numismatics, for long-term purchasing power preservation and wealth building?
Well, as I mentioned earlier, and I don't say this lightly, this is honestly the best value I've seen in 2 decades of being in this industry. In fact, I'll be flying to Sacramento on Wednesday and to New York City a few days later to buy back from clients of mine large bullion positions and swapping them into circulated $20 gold pieces. Now, 3 years ago, I flew all around the country doing the opposite. I'm a big ratio guy. 3 years ago, towards the end of Bush right towards the end of Bush's second term, leading up into Obama, the threat of confiscation became center stage. Premiums on certified uncirculated numismatic coins went so high, I had never seen anything like that before. Way, way outside of normal ratios, way, way outside. And I looked around me and I said, the world is getting scarier. The separation of wealth is growing. And having high-priced numismatics to me made no sense, especially when the premiums had grown to such high levels. Premiums were as high as 50 or 60% above gold bullion. So I flew all around the country, became platinum medallion with Delta, flew to 50 cities, and I bought back numismatics from all of my big clients and swapped them into bullion. The transaction would go something like, I fly to your home, I pick up 1,000 MS-62 Liberties, I swap you into 1,600 gold eagles. Everybody wins. I would sell those 1,000 coins I bought from you to one of 4 large auction houses that I at the time thought were dumber than a mud wall, bidding for these coins at enormous premiums. Now subsequently, those premiums have crashed. It happened to be, in my opinion, the smartest business move I have ever made for my clients that listened. But much like markets move from overvaluation to undervaluation and then back again, that's where we are right now. I have never seen a time in 2 decades where you can buy circulated $20 gold pieces and circulated $10 gold pieces for the same price, or even in the case of the 10s, less than their bullion counterparts. Ever. Never. It is the best value I have ever seen. Normally, you pay a 15, 18% premium for those coins above a gold eagle. Right now, it's the same price. And in the case of the $10 Liberty, which is a half ounce, they're 3% cheaper than a brand new half ounce gold eagle from the U.S. Mint. So, normally, I would say it's about number of ounces that matter. So gold bullion would normally be the answer to that question. But I can tell you this, if I am noticing this right now, so are my counterparts in this industry. This is an opportunity that will not last. I am not trying to be trite. I am not trying to push you into anything that you don't want to do. But all I can tell you is that in 2 decades, I have never seen premiums so low on the numismatic coins ever, including the low-grade uncirculated coins. I have never, ever, ever seen such a low price on them in their relation to their melt value. So it is about number of ounces that matter. I'd stay away from the high-grade stuff, but if you can buy pre-33 coins anywhere near its melt value, then it's a damn good deal. So,
all right, thanks.
Number of ounces that matter.
Oh, thanks. I think what we'll do is we can post the remainder of these questions in our newsletters with answers to them. And just so everyone knows, you can view a recording of this webinar at blog.milesfranklin.com. It'll be our top post right after the webinar. And do either of you have any closing thoughts?
Yeah, I have one. Again, people, you can ask all the questions you want to me at any time. And Andy, just email at the address there or give me a call. This is not just about the webinar. My job is to answer questions, and as you see the mailbox every day, I get lots of questions. So look forward to communicating with all of you.
I'd like to say one last thing as well, and I hope you all take this to heart. This is an industry that is non-regulated. There are no police in this industry. There is no SEC or CFTC. There is no governing body that is overseeing what I do or what any of us do in this industry. Reputation means everything in this industry. In 22 years of business, not only have we maintained an A+ rating with the Better Business Bureau, we have never had a complaint levied against us by any regulatory agency, and we are endorsed by some of the biggest names in the industry. It may sound as though I'm trying to pat myself on the back, but I'm really not. All I'm simply trying to say to you is that it has been our mission for 2 decades to run this company the way that we would want to be